Hello, welcome to ICAN on Air. Before the COVID-19 pandemic, the Nigerian government and indeed the business climate have been grappling with weak recovery from the 2014 oil price shocks. And back in 2014, our audience may remember that GDP growth tapered around 2.3%. That was in 2019. Growth has since been fragile as a result of relatively low oil prices and limited fiscal space. Investments by firms have been impeded, largely due to the uncertainties that the COVID pandemic's limited knowledge about its duration of the outbreak, the effectiveness of policy measures, and the reaction of economic agents to these measures, as well as negative investor sentiments, which were causing turbulence in capital markets. Joining me on our question and answer segment on this program today to enrich our depths of knowledge on the economic implications of COVID-19 on financial statements using credit loss model in line with IFRS9 is ADEADEBAYO ABDULKABIR SHUAIB Msc, MBA, CFE, FCTI, FCCA, FCA. By definition of his job, he is the Director of Finance and Administration, FinPark Development Foundation, an NGO founded by the World Food Program. And he is also a co-founder and pioneer director of studies for Top-Notch Learning Center, a renowned fraud detecting expert. Talking about my guest, we are going to be having more on our esteemed guests very shortly. And also on this program, we're going to be giving you a bit of tidbits on ICAN, what we call our ICAN diary, a few things that are on our calendar that we want our professional colleagues and friends of the profession to know. A few adverts. Please stay connected. We shall be back with you very shortly. You are welcome back, Mr. Adebayo Shuaibu, FCA. You are welcome to ICAN on Air program.
Thank you. Good evening, Mr. Akin Fatunke, FCA, our erudite anchor on ICAN on Air. Thank you for having me.
Thank you, and we just shoot straight. Looking at the economic implications of COVID-19 and then looking at the linkage on financial statements using credit loss model in line with IFRS9, I want us to draw up a foundation that will help us shape this discourse by asking you to give your own insights, because we are all aware that COVID-19 pandemic has existed, came with its twin Omicron, many devastations. I want to ask, what relationship does it have on organization financials, this COVID-19 stuff?
Thank you very much. That's a brilliant question. Before I can jump in, because of our viewers, just to create a few background about COVID-19, it's not news that in 2019, this novel pandemic came into limelight in Yuan before we experienced our own first index case in Nigeria on the 27th February. In the next 2 days now, it will be 2 years precisely that we have the first index case. And so far in Nigeria, 25,000 people contacted it, and 22,000 plus have been discharged, while 3,000 plus have said to be passed to the graveyard. And now, what is the impact of COVID-19 as relates to the financial statements? We all knew that anything we do in life resort to naira and kobo or dollar or pounds, depending on jurisdiction where organization or individual operates. So COVID-19 have affected individual financially, COVID-19 have affected organization financially, and those impacts are enormous. And we have some organizations that are immune to it, where those organizations are laughing to the bank by this, that is, it affects them on a good way, while some it affects them on the other way. Now, the impact is very, very straightforward. We recall that in March till September, we have at a time 2 active months of lockdown. During those periods, there is skeletal movements, business will be affected, and many things will be affected. So on that basis, the impact of COVID-19 to organization, it has caused them a lot. And if you look at the bottom point of the organization, if not well managed, some organization will go down the road to the extent that they cannot function or operate as expected due to that particular impact. And we know that the government of the federation actually shown out some succor to some people, but that will be discussed intensively. To answer the question straight, COVID-19 have big impact in organization financials. It makes them to burn more money and also assist some organizations to have more money. So it depends on the organization we are looking at. Thank you.
Thank you very much for that intro. So let me quickly then link it for the benefit of online participants. I know we have a lot of students in here, a lot of professionals. Maybe you want to remind us, what are the disclosure requirements required by IFRS9?
Thank you very much. I think that is required by International Accounting Standard 32, presentation of financial statements, presentation of financial instruments, and IFRS9, recognition and measurement of financial instruments. Then IFRS 7 talks about the disclosure that you don't mention about financial instruments. Before I go to that disclosure, I would like to bring it to our audience to understand what we mean by the financial instrument as defined by IAS 32. IAS 32 says financial instrument is an instrument that gives right of assets to one entity and liability to another entity. Individual, organization, all have financial instruments. And as we tie it to the COVID-19, we will be affected one way or the other with our financial instrument. Example, the money you place in your bank, for the purpose of the audience, we know that our audience, they are all not chartered accountants. We have many chartered accountants in the house. We have some that are friends of chartered accountants. So the money you have in your bank is a financial asset to you, and it's a financial liability to the bank. That is the reason why the bank send you a credit alert. That's why the standard say financial instrument is an instrument that give right of asset to one entity and liability to another entity. In bringing it back, we are looking at disclosure of financial instruments. There are many organizations that invested in treasury bill There are many organizations that are invested in stock. There are many organizations that are invested in debenture. During this pandemic, the organization they invested in will not operate. Many of them do not operate, especially the airline industry. So if an investor have a financial instrument which is referred to that investor as financial asset in that particular organization, the impact of COVID-19 will make them to reassess the worth of that financial instrument so that they will not overcarry it, and they must use IFRS9 model that we are talking about, the credit loss model, to ascertain if what they have inserted in their financial statement still remain the same. So the disclosure requirement that IFRS 7 asks us to look at is the significance of that event. We are talking about COVID-19 now. The significance of COVID-19 event on their investment. They invested in another other organization that were not in operation because of COVID-19. Let's just use an airline company. If that investor had huge, massive investment in an airline company, then that investor knows that during those periods that we have a massive lockdown across the globe, their investment has a tendency to be impaired, and they need to use what we call a credit loss model to ascertain the level of that impairment. So in disclosing it, we will still go ahead when time permits us to break it down to how can we test for that impairment, the level of the test, and what we need to do. But straight to your question, the disclosure is that we want to know the significant impact that that event have on that financial instrument. It needs to be disclosed in line with IFRS 7. Also, the risk attached to that financial instrument, the nature of the risk and the significance of the risk needs to be disclosed. Amounts invested in that organization needs to be disclosed. The impairment loss that is already recognized or calculated needs to be disclosed in the face of financial statement in order for the users to make predictory and confirmatory decision of their investment in line with International Accounting Standard 1, presentation of financial statement.
Thank you very much, Mr. Shuaib, for those broad ways you have mentioned it. I like to guess that even my grandmother and my grandparents in the village knew COVID-19. We are not seeing anything. Obviously, if at that level, we can then imagine for MSMEs and big businesses. Now that you have been able to tell us that COVID-19, that relationship to organization financials exists, will you say the impact is positive or negative?
Thank you very much. It's a good question. The impact, I would say, is negative, and the impact, I would say, is positive. It now depends on the organization or individual we are looking at, but let me take it from where it's negative, which I've started with. During this COVID-19 period, we knew that the airliners, they are over-impacted negatively, they cannot fly, and they need to pay bills. They need to pay their staffs, they need to run the organization. And that brings about where many airlines downsize. And we thank God for the intervention of the government of the Federal Republic of Nigeria, though it may not be obvious to many people, but some of us that have the insider information knows that the government gave some soft loan to the airliners because of the huge impact it has on them. So for those that have it to be positive, telecommunication, the telcos, they raise a lot of millions or billions. In fact, day before yesterday, we are told that a telcos is having 2 billion as a profit. In the news, I may not be able to mention the name. So it shows that during that period, everybody now needs to be calling their loved ones In fact, some of us that don't have time because of work to reach out to our family, we are burning data to make call, we are burning data to make WhatsApp or video call, we are burning airtime to make call. All these increase on geometric ratio, not on arithmetic ratio during the lockdown, because the COVID-19 makes people to be at home. Even when we work at home, this also have more positive impact on the airline, on the telcos, because while you are working at home, you are using data. So aside from them, we still have another organization like the medical organization. Let's narrow it down to the lab scientists. The lab during the COVID-19 and currently, not even during the COVID-19, they are able to rake a lot of thousands or millions due to COVID-19. You agree with me? If you are to travel out of the shore of the land now, the lab scientists' statement of financial position will be in a better position, because you must do 4 tests. 2 tests before you leave the country, 2 tests before you come. That is, you are leaving Muritala Muhammad Airport, you must have done a test with a lab scientist or a lab approved by the government. When you get to the airport destination, you do another test. That one is going to that destination authority. When you want to leave that destination, you do another COVID test. And when you come down to Nigeria, you do another COVID test. And minimum is 40,000. So, and look at the number or statistic of those who are traveling out of the country. You will agree with me that these lab scientists or lab organization, they will rake millions of naira or billions of naira. So in their own side, COVID-19 is positive to them. Now, to some organization currently, majority of organization, let's call it the big organization, PLC, and thank God for the CAC Act of 2020 as approved, which allow organization to have their board meeting online. Like my organization where I work, we have 3 directors that will flew from various countries to Nigeria. We pay millions of naira, but this time around during the COVID-19 and currently when they are having their AGM, like we are seeing ourselves now, they didn't need to burn a lot of money for airline, hotels, meals, and many incidentals. Now the organization we have saved a lot of money, and it affects the financial positively. To round it up, take for example, in my organization, we do retreat, and we have almost 145 staff that will come from various states to Abuja, and we need to house them, give paying hotel, paying per diem, paying allowance. All these will range up to 40,000 per person. Times it by 145 people and for 5 days. That is almost 30 million. But in this pandemic, during the COVID-19, that's a positive aspect. We only spent 3 million, almost 4 million, representing just 13% of what we supposed to spend. Although there are other expenses. So in summary of your question, it depends on where we are looking it from. It may be negative, it may be positive. In fact, negative to the extent that you need to buy sanitizer, hand sanitizer, you need to feast, you need to buy a face mask, you need to place all those sit here, keep a distance. All those amounts will be some expenses. But in major, in fact, to the issue of Chartered Accountants of Nigeria and to professionals, the IT that we are being clamoring on by the issue of Chartered Accountant, that of soon the technology will take the space, and that is what COVID-19 have done by bringing it nearer. If not for the invention of COVID-19, we know it's not a good thing, but that accelerates the technology embracement of individual organization or individual as a whole by embracing technology, knowing fully that now, okay, it's during this pandemic 2 years ago or some months ago that this ICAN on Air come on board. And also some organizations are using Zoom now to do all their business. They are using, it's not only Zoom, they are using Google Meet, they are using many devices. And Some financials now is posted online. You can host your system online. In fact, technology have taken over everything. We are not saying technology will not come, but COVID-19 invention accelerates it, and this will now have impact on the financials of organizations.
Wow. Elaborate. Positive, negative, depending on where you stand. And now let's, again, perhaps now look at our CPU. And by CPU, I'm talking about the boss, the stock exchange, where, we do our business of exchanging shares and do other activities. Naturally, COVID-19 must have taken its toll, maybe not totally, but its toll. I'd like to ask you, what impact does this have on investment and its effects on financial assets?
Thank you very much. We knew that during this pandemic, we have 2 times major lockdown that we cannot visit anywhere, and the stock exchange market is not immune to that. An individual organization or individuals add stock in with organizations, and the Nigeria Stock Exchange was not actively traded during this period. Then it affects individual or organization because the stock they are having that is traded in the stock exchange market is a financial instrument. In fact, a typical financial instrument that is equity model, because in terms of financial instrument, I need to even still go back, if time permits me, to break it down that we have 2 types of financial instrument. It can be equity, it can be debts. Now, we start with financial instruments, can be asset or liability. In that assets, it can be equity, it can be debt. Equity in the sense that it's your asset, but it's an equity asset. You purchase shares of ExxonMobil, you purchase shares of Total, to mention but few organizations. That is an equity asset. But if you purchase a debenture or you purchase a bond, that is still a financial asset, but it's regarded as debt instrument. Now, during this COVID-19, which we all knew that those shares were not actively traded in the stock exchange market. The market capitalization, in fact, it's not only Nigeria, US, UK, every country market do not see boost because there is no active trading. So on that note, if an organization is preparing their financial statement at the end of the year, or it falls during those period of lockdown, whereas the stock exchange market will have dropped down. Say for example, if I have 1,000 units of shares, let me use a hypothetical figure, shares in ABC company, not to mention, I have 1,000 units in ABC company, and before the lockdown, the price is 100 naira. But during the lockdown, the price moved to 90 naira. You will agree with me that the financial instrument that says we should use a credit loss model, by we fair valuing it at the first instance, will give us 100,000. Then at the end of the year that we have fair value, we have 90,000. We have lost 10,000. So what does IFRS9 says we should do? If that financial instrument we are talking about, as this example in ABC, let's say ADEADEBAYO owns 1,000 units of ABC. Before the pandemic is 100 naira per shares. But during the pandemic, my year end falls during that pandemic, and it has crashed. Not that ADEADEBAYO is not doing well, but it's a general phenomenon that affects the whole country and business. So my share price, because there's no active trade in stock exchange market, it has now dropped to 90 naira. Now I'm having 90,000. then that 10,000, what IFRS 9 says I should do in line with the credit loss model is to debit my profit or loss if that financial instrument I hold it for trading. We are coming there because this topic is a broad topic on its own, because that financial instrument, maybe I hold it for trading. If I hold it for trading, what the standard says I should do is to debit my P or L, my profit or loss, as a loss expenses, and then credit my financial asset. It will reduce to 90. Then I need to go to the notes to the account and explain as a disclosure requirement required by IFRS 7 by stating why that financial instrument reduced, how I was able to treat it, which level of model do I use, because we have 3 steps in credit loss model. We have 12-month credit loss, we have expected credit loss, we have whole life credit loss. Before you can apply all this, an incident will lead to that before you can apply. Like this COVID-19 now, we call it expected credit loss. It will fall under expected credit loss model. Why? Because the risk attached to that financial instrument is significant. Therefore, expected credit loss model needs to be applied by reducing that financial asset I have in ABC of 100,000 to 90,000. By doing that, I've applied IFRS 9 in the midst of COVID-19.
Very, very interesting. I know you've given us a few examples. I would like to see if I could also kind of drill down on these financial instruments, which you said needs to be recognized and which needs to be measured. You've given about three broad categories. Can we delve a bit much deeper with some other examples so as to be able to educate our listeners?
Thank you very much. You are my indefatigable anchor. You know, when you have things to say and the anchor is pointing to that, you'll be very glad. It's a good question. Let me quickly say that according to International Financial Reporting Standard 9, we have what we call credit loss model. It's just English that the ISB is using. When we say credit loss, you have a financial asset. Asset is debit. So if asset is debit and we want to reduce asset, we have to credit it. If we are reducing it, that's impairment of financial instrument or financial asset. So the moment we are reducing it, that is what we mean by credit loss model. The standard now came with 3 models. The standard postulates number 1 model by saying 12-month credit loss model. I want our professional colleagues here and viewers to understand that this credit loss model they are talking to or about is a general provision. If we are to look at, we are knowledgeable about what we call general provision, we are knowledgeable about what we call specific provision, and we are knowledgeable about what we call bad debts. I now try to link what IFRS 9 is saying in a simple terms to professional or those who are listening to us, that the first model, which is 12-month credit loss, is our general provision. And what does 12-month credit loss says according to IFRS 9? 12-month credit loss says that 12-month credit loss will be applied on organization financial assets if there is no significant risk attached to the financial asset they are holding. That is, everything is going on well. I will use our institute as an example. We have members and we have up to 55,000 plus members, and we have to pay subscription. It's just an example. If all members are paying their subscription as when due at the end of the year, then what does this institute need to do? They will just make a minute provision should, in case 1 or 2 people may not pay. That is what we call 12-month credit loss. Annually, they will be making that provision by saying 2% of what we are expecting from member should be our provision. That is a general provision. When we go to the step 2, which is expected credit loss model, ICAN are giving us, and many professional body, when you are at a particular age, I think 60 years, if I may be right, you may apply that you want your subscription to be stopped. Why some will stop it automatically? I think we have it in our institute. You correct me if I'm wrong. Then that aspect of receivables, we are expecting our members to pay as annual subscription, but those people now attain 60 years. We all know that those people, they can apply that they have attained the status of elders, they can be paying subscription. So as a result of that, the institute will do what we call expected credit loss for those people in that class. Finally, which is the third aspect, we call whole life credit loss. Whole life credit loss, we do pray for bad thing. Don't let me use, as for example, I go back to organization of ABC Nigeria PLC. If they are expecting receivable for 100 customers and everything is going on well, those customers are paying as and when due, except for 1 or 2, they will do 5% provision. Let's say it's 100 million, they will just do 5% of 100 million to be reduced. If that is the case, we are doing 12 more credit loss. But out of 100 customers, 2 or 5 customers have been declared that bankrupts, or they are suffering from business problem. Maybe the COVID-19 pandemic affected them negatively. They are unable to pay what is due to you as ABC, and they have been paying in the past. So this is where there is significant risk attached to that your financial asset, because you as an organization is a receivable to you, which is an asset, but to them is a liability, and there's a significant risk that they won't be able to pay that particular amount they are owing you. Then you need to reduce your asset by crediting it in the second level called expected credit loss model. But out of 100 customers, the third aspect, 50 customers or some were impacted and they close up due to COVID-19. They now close up their business and they are owing you. Then that is whole life credit loss. Whole life credit loss is where the risk is significant and it's expected that there will be an whole life credit loss. Take, for example, out of the 100 customers, one customer is now owing you 20 million. They now inform you that, come, we are not in operation again and we won't be able to pay all the 100 million we are owing you, but we can assure you that from the assets we put for sales and the trustee or the liquidatorship, they will be able to pay me 12 million out of the 100 million. So by finding the net present value of that 12 million when they will pay, if they are paying me the 12 million today, then it means I've lost 88 million. That is the whole life credit loss I've lost from that financial asset that worth 100 million from a company that is owing me. So indirectly, the first one is 12 more credit loss, which is the general provision, expected credit loss, which is the specific provision, and the whole life credit loss, which I refer to as the bad debt. And this we have impact by crediting the assets and debiting the P&L, which definitely will affect the bottom line of the organization profits, and by that affect the shareholders, because it's what they earn. That's why we call it retained earnings. What they earn is what they will now share, which the impact is on the financial. Thank you.
Absolutely awesome. Thanks very much for all the elucidation. And to our online viewers, if you are just joining in, this is ICAN on Air, a medium where by the Institute of Chartered Accountants of Nigeria brings to your doorstep practical knowledge of finance, accounting, risks management, technology, and general governance. And if you've been with us for close to about 37 minutes now, I've been fielding questions to my guests, Shuaib Msc, on economic implications of COVID-19 on financial statements using credit loss model in line with IFRS9. And if you have questions, please pull your question on, and my esteemed guests will be ready to tackle them for you. Let's make this as practicable as possible. We are going to go on a short break now, and when we come back, we continue with our esteemed guests, Mr. Shuaibu. Please don't go away. We'll be back shortly. Yes. Thank you very much. A bit of production glitch that we had in there. We're just going to tell you about our second joint ECOWAS ABUA Congress. And it has its theme as good governance and sustainable development for regional prosperity. And it's scheduled to come on March 16 to 19, 2022 at Farmington Hotel, Monrovia, Liberia. Our chief samurai in ICAN, Mrs. Comfort Eitayo, will be amongst the host of guests that will be making great pronouncements at that Congress. Make sure you tune in and be part of that. And okay, you're welcome back. Mr. Shuaibu, before we left, we may now have Olusoji Sosolu that going forward, how can we as professionals leverage effectively or any perspective a pandemic of COVID-19 magnitude to ensure a true and fair financial presentation?
Thank you very much, sir. To quickly answer Olusoji, very, very simple. I will use a practical experience where I worked during the time of this pandemic. Thank God that in the finance unit, we scan all the documents, all the journal before we post it to the system. And there is an audit exercise. The external auditor, one of the big four, which I didn't need to mention name, needs to audit us. They audited us from Lagos. What we just do is to send all the financial through our SharePoint, and they assess it. due to the technology that COVID-19 brought near to us. We are not saying there is no technology, but we were forced. We were forced to embrace it. Before that COVID-19, they used to come down to Abuja to come and audit us. And it's not that we are not even scanning all these documents. But during this COVID-19 that they cannot move, what do? We need to now put all the scanned documents into a SharePoint folder. We can use OneDrive, we can use many things. From there, they access and they put their question on the mail. We answer. Professional, we can do that. Aside from that, the institute have taught us about artificial intelligence. And currently, we have software. To mention just one, let's say QuickBook. The moment you generate your bank statements, you can just upload it to that software, because the software has what we call artificial intelligence, takes what is going to transport, take what is going to meeting. If you chart your chart of account well, and when you are making that payment, the accountant make it to the extent that being payment for electricity or being payment in respect of board meeting. The moment the software, the QuickBook software picks the bank statement, those being in respect of electricity bill, you are not the one that will post now. If you just post it direct to that electricity bill column, anyone that is not well analyzed, that is the one the QuickBook or the software will not generalize and say on unidentified ledger, that is you, that will not trace it and post it. That is what the COVID-19 have assisted us in doing by strengthening our financials. So to Olusoji, I would like to say that we, the professional, we can leverage on technology as being taught by the institute, and the institute has been in forefront to be advocating for technology embracement, because it will be it's already the order of the day, not it will be the order of the day. Thank you.
Excellent. And we quickly then take Modibo Babangida. And please, can you shed more light on the recognition of equity instruments using the fair value model through profit or loss and through other comprehensive income?
Thank you, sir. Thank you, Babangida, for your question. Maybe I would not say, Bosch, when we are looking at this financial instrument, is a topic that is very broad, that maybe you will use your office or ICAN will still bring me back to demystify it fully. But since we are relating it to COVID-19, I will quickly answer Babangida's question. When we talk about financial instrument, I've said it's an asset or liability. When is that asset? It can be equity or debt. That equity, what is that? Meaning that you are owning shares of another organization. The standard only permits fair value and subsequently fair value measurement. Now, to your question, which one is going to P&L, which one is going to other comprehensive income? You know, in statement of financial position under IFRS9, we have statement of profit or loss and other comprehensive income. The profit or loss take care of P&L. Other comprehensive income take care of OCI. Then IFRS9 states that any equity instrument that you hold for purpose of trading, buying and selling, any gain or loss in fair value measurement, let's say at the beginning of the year is 20 million, at the end of the year you measure is 22 million. That 2 million will be credited to P&L and debited to the financial instrument, because that financial instrument is held for trading. But there's another class of financial instrument. If you hold that financial instrument permanently, you have already elected for irrevocable election, meaning that you are not ready to sell the financial instrument. Instead of selling, you want to even increase your shares in that financial instrument, in that organization. It means any gain or loss from that financial instrument through fair value measurement must go to other comprehensive income, OCI. We can call it OCE as well, other component of equity. That's where it will land, under equity portion of the financial statement. So it depends on how you designate it, your financial instrument, that will tell us if it's going to P&L or if it's going to other comprehensive income. Thank you.
Excellent. Thank you. I'm sure Mr. Babangida will have been much more enlightened from what you have said. Now, I come back here. What will be your advice to organizations on the credit loss model and how to go about it? I know you have espoused what it is. You advise organizations and how should they go about it in a practical manner?
Thank you very much, sir. My simple advice as a financial expert to organization is when they are preparing their financial towards the year end, and they will look at all their financial assets. Example of the financial asset that we have is trade receivable. Example of the financial asset that we have is equity, ordinary share in another organization. And if they have ordinary share in another organization that is less than 20%, maybe 1 to 19%, is captured by IFRS9 as financial instrument, which is an asset to them. They may have treasury bill, they may have promissory note that is an asset. All this is a financial asset in their financial. It may be under current or non-current asset. But what they need to do when preparing the financial statement before at the year end, when the auditor is about to come to review their financial, they need to look at the credit loss model, meaning that this financial asset we are putting in our financial, what is the risk affecting it? It's not compulsory that you will impair your financial instrument if there is no risk attributed to it, because impairment, according to IFRS 6, asset is said to be impaired if the carrying value is greater than recoverable amount, and recoverable amount is higher of fair value less cost to sale and value in use. We are saying that the asset you put in your book, let's say trade receivable of 100 million, is said to be impaired using credit loss model if what you will gain from that asset in future or what will flow in from that asset in future will be less than that 100 million you put in your book. Then that asset is said to be impaired. Then you need to write it off by reducing your asset by crediting it and debit your P&L or OCI, depends on where you designate it. But if we are talking about trade receivable, definitely you go to profit or loss. So in summary, organizations should always look at the risk, significant risk, attributed risk, nature of the financial instrument to take care of their credit loss model, and look at the level they are. Either they are in stage 1, which is 12-month credit loss, or stage 2, which is expected credit loss, or stage 3, which is whole life credit loss, in order to present fair financial statement. Because in line with IS1, the objective of financial statement is that the financial statement must be fairly presented in order for the users to make predictory and confirmatory decision. So based on your question, I'm advising organization when they are putting their financial statements up, especially at the year end, they need to find the current fair value if they are using fair value. You can actually use amortized cost. Amortized cost is what is the opening balance of financial asset. What is your effective rate of interest? The effective rate of interest is the rate ruling in the country issued by CBN. And what is your nominal interest rate? The nominal interest rate is the rate you sign when you are collecting the loan from the bank or whoever that is giving you the loan. Then when you plus minus that, you get your closing balance. That is why we call it amortized cost. Then the difference also can go to P&L or OCI, depends on where you designate it. So it's good for organization to ensure that they test their financial assets for impairment in order not to overbloat their financial asset. Thank you.
Super. Time will never be a friend here. And
yes,
and the way and manner you have reduced this with the commonality that you have reduced, I'm very sure our participants have learned 1, 2, maybe 3 different things from the way you have educated us this evening. Now, may I just ask you, Adebayo Shuaib, FCCA, FCTI, FCA. We'll have your last word very briefly.
For me, I would like to first acknowledge the Institute of Chartered Accountants of Nigeria for this novel program introduced by the Institute, especially the Governing Council led by Mrs. Comfort Olu Eyitayo, FCA MNI. Also, to appreciate our erudite and indefatigable anchor, because it's not easy to roll in program every Tuesday and Thursday. In fact, this sacrifice you are making to the Institute, we appreciate it. We want to say that God, in His Spirit mercy, will crown your efforts, and also to appreciate all the ICAN staff and my professional colleagues as well, and our participants online across the globe, because this is an educative forum where one or two people can gain experience, like what happened day before yesterday, and when the day the chairman of Financial Reporting Council, the DG of Financial Reporting Council presented, I learned one or two things. So as a professional, learning continues, and I want to oblige our members to always key into this program every Tuesday and Thursday in order to get one or two more knowledge. It's a knowledge-based program, and I want to appreciate every one of you with the backroom staff that put all this together, and you that spearhead it. I want to say thank you, and it will always be mine if the Institute call on me to come at any point in time to share little knowledge.
I must say a big thank you, and I will take all the thanks. I'll take it back to my editorial team. A member of council, Miss Shewa, I'm sure, very sure that is Shewa and our erudite team working day and night. They will hear you. We go briefly out. I'll be back. Don't go away. We have a few more to tell you in closing. We'll be back shortly. Thank you very much. Few tidbits. Today, February 24, 2022, the Brent crude hits $102 per barrel, been the highest since 2014 amidst the Russian-Ukrainian crisis. Of course, that global benchmark rose by 5% to trade at $102.27 per barrel. Meanwhile, Western Texas Intermediate also witnessed a corresponding increase of over 5% to $97.06 per barrel. And may I use this opportunity to join the Institute of Chartered Accountants and to say that ICAN on Air is commending Mr. Ojo Jonathan Adewale, who completed the ICAN professional exams at the age of 17 without retaking any paper, at the various stages. Ojo Jonathan Adewale has been appointed an ambassador of ICAN, also awarded a scholarship to pursue his university degree. Congratulations, Ojo Adewale. Now, our next episode of ICAN on Air comes up on Tuesday, March 1st, 2022. The venue will still be the ICAN on Air portal. Please tell somebody else to join and come and get right, proper, fantastic online education. And the topic we are going to be looking at will be monetary policy tools, understanding Nigeria's interest rates, qualitative easing and exchange rates management. And guesting with us will be Tunde Lemo, OFR FCA. Mr. Tunde Lemo is the former CBN deputy governor who had significant leadership in both public and private sectors spanning over 37 years. A first-class accounting graduate from the University of Nigeria, Nsukka, he served as deputy governor in charge of operations of CBN, in which role he drove the industry-wide shared services initiative towards achieving efficient banking services with 30% cost savings for the Nigerian banking industry. He has also been very much involved in restructuring of the Abuja Security and Commodities Exchange and Nigeria Export-Import Bank. He chairs boards of 6 companies and agencies, and that includes the Titan Bank Limited and Flutterwave. Yes, you heard that, Flutterwave. And he's on the board of 3 other companies. You do not want to miss that. Let me leave you with this quotation. We are in this together, and we will get through this together. End of quote. Attributable to the United Nations Secretary General Antonio Guterres. And so the sun sets here on ICAN on Air today. By the special grace of God, we'll be back with you on Tuesday, March 1, 2022, and make sure you are there. I remain Akin Fatunke, your anchor, ICAN on Air. We will be back with you live, more direct, and more researched. And like I always say, be the change you like to see. Bye for now.